Welcome back. Tax day is coming. If you have not filed your taxes yet, we are here to help. Local financial advisor Alan Porter with Strategic Wealth Strategies is joining us with some last-minute advice. Alan, great to have you in the program this morning. Let's get right to it. What are some of the tax changes we need to be aware of?
Well, first off, the standard deduction for a single taxpayer is now $12,950. And for the married taxpayer, it's now $25,900. But also keep in mind that pandemic-related tax breaks, such as charitable gifting and the child tax credits, are no longer available.
So April 18th, just around the corner, there's a lot to digest here. What should we do if we can't make that filing deadline?
Well, if you can't take it, I mean, April 18th has changed because it used to be April 15th. But you need to file by April 18th. You can file an extension, 6-month extension that goes till October 16th, I believe. But you must file by April 18th and make the best adjustment to make sure that you pay by April 18th.
Yeah. So, Alan, I got to ask you, what mistakes should we be careful to avoid?
Well, avoid filing late, avoid not paying enough money because the government is going to assess a penalty for you. So like I said before, you've got to make a good effort to file by April 18th and make a good effort to make sure you're paying the right amount of money. Because even if you file an extension, if you still owe the government money, guess what? They're still going to assess a penalty against you.
Really? I don't think a lot of people realize that.
There's lots of things that people don't understand, and they need to.
Yeah. So with all this in mind, Alan, how can we best set ourselves up for future tax seasons?
Well, you need proactive planning for one thing. You don't need reactive planning. You don't want to overpay in your taxes, because what you're doing, if you overpay and expect a big return in the future, what you're going to get is a loan to the government that's interest-free. So why would you give the government an interest-free loan when it compounds interest for them and not yourself?
That is a very, very good point. So your best advice, last thing you want to share with people who are still waiting to file?
Well, if you're still waiting to file, like I said, you can file up until April 18th, but you must file and you must pay, because if you're not, they're going to give a penalty. If you have a 401k, you can still contribute. Well, it's past the date now, it's 31 December. And then for the IRA, it's 18 April, you contribute that. But I want to caution you against that, because it is a tax deduction, but it's tax compounding. I think people need to, instead of thinking of 401k, think about a Roth 401k or Roth IRA, or consider cash value life insurance that grows tax deferred. You get your distributions tax-free, does not affect taxation of Social Security or the means testing for Medicare Part B, which will be in the thousands per year. You have access to tax-free money for long-term care. You're protected from lawsuits, liens, and judgments. You have no market risk. Many other benefits that a stock portfolio or a 401k cannot provide. So be proactive with your planning. People need to become educated on this.
Alan Porter, we appreciate that with Strategic Wealth Strategies. Thanks for your time this morning.
Well, thank you. I appreciate it.